Good morning, friends. I am Neelam Jha, ex-Chief Manager, Faculty, Central Bank of India, and today I am going to explain Certificate of Deposit, one of the key instruments of money market. But first of all, what is a money market? Well, money market refers to a section of financial market where financial instruments with high liquidity and short-term maturities are traded. Basically, it is used by the participants as a way of borrowing and lending for a short term. Money market consists of negotiable instruments such as treasury bills, commercial papers and certificates of deposit, etc. It was in 1989 that India introduced the certificate of deposits to increase the range of money market instruments in the country and thereby give the investors a greater flexibility in terms of utilization of their short-term funds. A certificate of deposit is a negotiable, unsecured money market instrument which is issued against funds deposited with it for a maturity of up to 1 year. So, as you can see, there are two parties. One, the issuer, and second, the investor. The issuer can be a scheduled commercial bank, a regional rural bank, and a small finance bank. Banks opt for issuance of certificate of deposit when there is a low deposit growth and a high demand for credit at the same time, or when there are stiff liquidity conditions in the market. Now, coming to the second party, that is the investor, a certificate of deposit can be issued to all resident Indians. Now, let's look at its main characteristics. A certificate of deposit shall be issued only in a demat form and held with a depository registered with Securities and Exchange Board of India. They shall be issued in minimum denomination of rupees 5 lakhs and in multiples of rupees 5 lakh thereafter. The tenor of a certificate of deposit at issuance shall not be less than 7 days and shall not exceed 1 year. Certificate of deposit shall be issued on a T+1 basis where T represents the date of closure of the offer period for issuance of the certificate of deposit, and there will be no grace period for repayment of certificate of deposit. Please note, banks are not allowed to grant loans against certificate of deposits unless specifically permitted by the Reserve Bank of India. And certificate of deposits, they may be issued at a discount to the face value, or they may also be issued on a fixed or floating rate basis provided the interest rate on the floating rate certificate of deposit is reset at periodic rests agreed to at the time of issue and is linked to a benchmark published by a financial benchmark administrator or approved by FIMDA, that is the Fixed Income Money Market and Derivatives Association of India. You might be thinking, is there an option of buyback of certificate of deposits? Well, yes. Issuing banks are permitted to buy back the certificate of deposit before maturity, but subject to the following conditions. Buyback of a certificate of deposit can be made only 7 days after the date of issue of the certificate of deposit, and the buyback offer shall be made to all investors in a particular issue on identical terms and conditions. The investors shall have the option to accept or reject the buyback offer. Buyback of certificate of deposits, it has to be at the prevailing market price, and the certificate of deposit bought back partially or in full shall be extinguished. Now coming to the trading venues and settlement. Certificate of deposit shall be traded either in over-the-counter markets, including on electronic trading platforms, or on recognized stock exchanges with the approval of the Reserve Bank of India. And the settlement cycle for OTC trades in certificate of deposit shall be T+0 or T+1. and the secondary market transactions in certificate of deposit shall be settled on a DDP basis through the clearing corporation or any recognized stock exchange or any other mechanism approved by the Reserve Bank of India. As you can see, the advantages of certificate of deposit, they are low risk, better returns and diversification of one's portfolio. But it is not a case where one size fits all. So before you invest, remember that your money would be locked for the tenor that you agree upon, and you cannot take a loan against the deposit, even if you are in urgent need of the deposited funds. So look at your financial goals and their timelines before investing. And yes, it is a good investment for those who are looking for a safe investment instrument and have enough liquidity options for any emergency. That's all for today. Thank you.